Welcome back, guys. We're continuing with advanced payroll segment for MYOB training. There's one or two other pointers that I had. We just had covered in a recent training session how to generate our employees' payment summary reports. We're still looking at what needs to be done prior to visiting our accountant to finalize our company tax return. What needs to also be covered is depreciation. Now, the accountant normally will take care of this for you. Okay, they will normally pull your assets together and depreciate and give you journals that you are required to enter in order to account for your depreciation. But just to give you an idea as to how to enter those journals in the system once the accountant comes back to you is what I'm going to cover right now. So as you can see here, we've got our assets. We've got furniture and an office, equipment and computers and motor vehicle and whatnot. And you've got how much it costed us and how much the items have depreciated, right? So over here, we've got office equipment, which costed $24,299 and it's already depreciated $18,000. And we've got $5,000 left in our asset pool for office equipment, okay? Now, depending on the size of the business, the accountant will give you the best option. So you've got different ways of depreciating assets. Now, if you're a small company and it's based on turnover, you can pull all your assets together and depreciate them at one rate rather than depreciating each item individually. Okay. Now, as I said, the accountant will give you the advice on this. What I'm going to show you now is the journal that you need to put in order to make this balance on your accounting end. So the reason why we do this, though, so that you're aware, is that depreciation is an expense to the business. So when you purchase an asset, for example, a company car, after a year of owning that company car, the company car is no longer worth the same value as what it was initially purchased it for. So if you purchased it for $50,000, a year later, that car is worth depreciates at 30%. So whatever that is, okay? So let's assume here it's worth $35,000. The $15,000 that has depreciated, the value, $15,000 which has depreciated over the year, becomes an asset. So it becomes an expense to our business, right? So that $15,000 will be entered in as an expense and will offset our profit for the year. So our profit will be reduced by that $15,000. So we need to put a journal that will offset our expenses for that $15,000 and at the same time will reduce our asset as well because our asset now has come down $15,000. Okay. I'm going to use office equipment at cost as an example here so that you can see what happens. Okay. First of all, we need to ensure that in our expenses, we've got an account for depreciation as an expense. So I'm looking here, and I'm looking for depreciation as an expense. We have it here, and we've got depreciated expenses, and we've got our different items as well. You can do it this way, or you can, depending on the accountant and which method they've chosen for you, you can pull them together, as you can see this account here. Okay. So let's assume here that it's been pulled together and accountants come back and said that depreciation for this financial year for all the items, for all your assets is $20,000. Okay. So we come over to accounts, we go to record journal entry and we put in the end of the financial year. Now this is important, okay, because this depreciation refers to the financial year that went by. It doesn't refer to our current financial year. So I'm not going to put in my current date, 3rd of the 7th. I'm going to put in the end of the financial year. So I'm going to put in journal for assets pooled and depreciated. And I made a spelling mistake somewhere here. Okay, so now I'll come over here and first of all I'm going to find that expense account that I showed you earlier, which is, where was it again? depreciation pool. Here we go. And I said 20,000. So I'm going to see if this is accurate or not. So I'm going to debit our depreciation expense account, and I'm going to now credit our asset account. Okay, just like that. Actually, you know what? I think I've got that the wrong way around. We'll see. We'll soon see now. Okay. So now I'm going to record that. Before I do that, very, very important. This is meant to be NT. Okay. There's no tax that is applicable in this journal. Okay. So most important is double entry accounting, expense, assets. Record that. Now what I should see if I've done it correct, if I go to my account list and go to expenses, I should see now that my expenses have gone up by 20,000 for depreciation. And my assets for low pool is in credit by negative 20. Okay. Now, if, for example, we were doing item by item, this 20,000 would have come into here, all right? And then that would have offset what we purchased it for, and then the net figure will be in this account here, all right? But because we've only simply got low value pool at cost, actually, you know what? We should have actually put that into this particular account rather than that account. So I'm going to go into here, find that transaction that I've entered. It's because it's not at cost. It's accumulated depreciation. It's this account here. So I've just fixed that up. Now, what you'll find now is the negative 20 has come across into my accumulated depreciation, low value pool account, which is the exact one that I want to go into. All right, so that's that. And if I now generate my profit and loss report for that financial year, you'll soon see that 20,000 has now offset my expenses, as you can see here. Okay, so total depreciation expense, $20,000. Okay, so that's how depreciation works, and that's what needs to happen. But as I said to you, you don't have to worry too much about the accounting side of things, because the accountant would come to you with a figure. What you're going to be responsible for a lot of the times is knowing how to go into the system and put the necessary journals in. The other thing I want to cover as well today is, this is also quite important, is locking our periods and this functionality here, the security functionality. Why? Because once you've finalized and you've gone to the accountant and you've submitted, or you're in the process of visiting your accountant to finalize your end of year tax return, you can still make changes to the entries, or someone can come in and mistakenly change a transaction in your accounts, and that will offset everything. Okay, and then you've got a big issue on your hands trying to find out what's actually happened. So, two things in order to prevent that from happening: after you've finalized your tax return with the accountant, start a new financial year. Okay, you don't have to. And this is the issue. You can actually keep running and keep entering in transactions in the current period and have your financial year, last year or the year before. A lot of people don't like to, for example, start financial years because they know that it closes off the period and doesn't enable you to make any changes to any transactions that have been entered in once you've closed the financial year. So a lot of people are reluctant to do this, but the issue or the problem that you face is that things can change, mistakes can be made, and then you've got an issue on your hands of trying to find out where, what actually happened. So two things, that's one way of safeguarding yourself. The other way of safeguarding yourself is if you go to your preferences and if you go to your lock periods, if you go to security here, and you go to lock periods, simply lock your period to, for example, let's just say we've reconciled everything to the 30th of June. If I've locked that now, okay, I can't actually go in to any of my transactions and make any changes. You can view it, but if I then go to try to delete, well, this can't be deleted anyway because it's a payment. Let me just try something else. That's the current financial year. It's been reconciled anyway. Just trying to find an old transaction, maybe disbursements. Okay, so here you can see here, you can't change this journal because it's been reconciled and it's been locked anyway. Okay, so it shouldn't enable you to delete it. You can't delete transactions dated in the lock period. Okay, so this is a way of you safeguarding yourself to make sure that either yourself don't go into an old transaction mistakenly and make any changes, in the same tokens, no one else does the same thing. So very, very important, locking periods. And the other way you can safeguard yourself too is get into the habit of selecting this transactions can't be changed, they must be reversed. Because once you've got this hot here, even though you can still go in and reverse an item, the beauty of that is if you make a mistake, you've got an audit trail. You've got a trail of transactions that have taken place, and you can therefore go back and make any changes. You've got a record of what's taken place. Whereas if you have left that on the setting that I had it on earlier, then you can simply go in and make changes, delete things, and then you will have no idea what's taken place. So that's another final tip that I wanted to cover. So that covers the advanced payroll function that we started a few lessons ago. We will continue with the advanced functionality of MYOB, and we're going to be looking at business activity reports and lodging our business activity statements with the ATO. That will be in our next training session. Thanks for listening.